So the real action is going to be, this will be the first time we get to hear from the Fed, John, in terms of their response to the Iran war and the oil shock. As you mentioned, no change to policy expected, but they're going to put out new forecasts that are expected to show an increase in their outlook for inflation. That will be interesting. And at the same time, they're going to nudge down, or expected to nudge down, their outlook for growth. So then when you consider the fact that we're at that point where hawks are really in control of the FOMC committee at the moment, those ones who are more worried about inflation than anything else. When you consider that weak February employment number and the fact that there are those warning $100 a barrel oil will eventually, once you look through it, become a tax on consumers and business and will impact growth, then I think what we could see on Wednesday is the start or the beginning of the Fed debate around how will they respond to that Iran oil shock, and will it ultimately result in rate cuts, and will they, of course, start to use the word transitory again?
And do we have an appreciation for where inflation is right now? And the reason I raise that question is because many people in the economics industry were looking at the PCE data on Friday into the weekend and were focused on the methodology that was used for certain indicators, certain readings on things like legal fees. What's your takeaway of what's going on at the moment?
I think, look, inflation remains above the Fed's target. It's certainly a core PCE, their own preferred gauge, is still beyond, their comfort zone. But, John, it's broadly, what I'll say, stable, perhaps. By component, there's certainly different signals being given off. For example, the goods sector, we saw in those numbers last week, the inflation story there is still somewhat mixed. But the service side of things, you look at the insurance sector, you look at periodically cost linked to education, tuition, healthcare and the like. There's clearly parts of the economy where inflation is real, sticky and persistent. And that's why the hawks on the FOMC are in control at the moment. And that's why we had several at the last Fed meeting warning that at some point they may need to start talking about hikes. Now, I think this Iran shock might put a different hue on the debate at the Fed. I'm not necessarily sure if the Fed will be talking about hikes near term. It's probably going to be more of a story of looking through that. But there's no doubt about it in terms of the Fed getting back to its inflation target. I mean, that remains a long way off for now.